Let's start with gold then, and that has come off its 7-month lows following the rout in the equity markets as investors bought precious metal on lower prices. But back home in India, a high rupee has capped gains in the precious space. The Fed Reserve's latest minute hint that the central bank will pause its monetary stimulus, which has sparked a sell-off across commodities. But the sell-off in crude has continued, where rumors that a hedge fund was liquidating substantial commodity positions sparked the crude's largest daily decline in 2013 on Wednesday. Brent for now is trading at around $115 per barrel and is testing its technical resistance levels at those current days. Let's get in then. Vijay Bhamwani, he's author and CEO BSPLindia.com. Also joining us is Shrikant Jha, he's Managing Director, PJ Commodity Ventures. Shrikant, hi, let me start with you first, and let's start with the gold and silver prices. The kind of declines that we have seen in the last 24 hours, do you think that much of the decline has perhaps been done by now?
Yeah, actually, if you look at gold, I was looking at the charts. If it holds its levels now, on the long term, I think you may see it forming into a triangular pattern, which means it may be sideways for a while. This I'm talking about, we have been taking the highs of that 1920 into account. But if it breaks 1500 is only then, but I would really say in the long term also things have really gotten bad. But until then, I think it will hold. And silver also, I think at 25 is what I would like to see it break, to really say that it is bearish, and we would look at a huge decline. Until then, I think yes, on the short term you could be selling into it, and perhaps we could look at these levels as the indicator to say that whether there's a trend change or not. Until then, I think we'll just have to wait and watch and be a little cautious on the trading side.
Vijay, how would you look at the gold prices at these current levels? Would you start your scale down buying now?
Not really, Manisha. Even though I've been staying off purchases since the last 10 weeks in gold and silver in the leverage space, I still don't find these prices attractive. Let's not forget there's a budget around the corner, and on the anvil are possibilities of financial instruments which are basically backed by gold to wean away investors away from physical buying in gold. So you're basically going against the power of the state by buying gold futures at this point in time. If at all I was to basically go in for buying bullion, I would prefer silver, which I have been talking about. Yesterday I spoke about buying silver by raising allocations by another 20% at the 54,000 odd levels. I would stick by that. I would focus more on silver, and should I basically get 51,800 or 52,250 levels, I might just raise the allocation by another 10 or 15% in the physical 99.5% uneven bars.
All right, so that's a turnaround coming in both gold and silver off their lows, and you are looking at nearly 0.5% of a run-up coming in from the kind of lows that we started the day with. Shrikant, how are you looking at the base metal prices though? Because it's weak data coming from Europe, China is not buying, the latest FOMC minutes, all of that really seems to be putting extra pressure on that sector.
I think the last 2 days saw the base metals really crash a bit. If you look at nickel, I think it came off from about 1990 down to about 910 or so. That I think is enough of a sell-off really if you look at terms of value. We were talking about copper I think sometime earlier, and that 450 level seems to be a number that it just finds it so difficult to get past. I think it's currently trading somewhere around 425, and we probably look at about 420. Aluminium is down, I think it's again around 411 or so. So taking these numbers into account, while you might say that in the longer term, yes, these metals are still in a large sideways movement, or whichever way you look at it, it's not really breaking any of the highs, and under the circumstances I don't really see any buying coming in. So if at all there's anything left in this base metal space, it could be just selling it at higher levels and covering it, or buying it at lower levels for these targets, like if at all you see the 450s on copper and such. But otherwise there's nothing really much in that, and I think I would actually stay away from most of these, except for maybe do a few trades when you find the trend is something that you can hold on to.
Sure. Vijay, how would you take a look at the nickel prices last 24 hours, and also if you look on a weekly basis, 7 to 8% of a decline coming in there?
Manisha, it's quite safe to say that nickel has underperformed its peers. It's fallen sharper, it's fallen faster, and it's fallen much more harder than its other non-ferrous and ferrous peers in the base metals pack. Although I did recommend very high risk buys in very short, very small quantities, in preferably the mini lots at 926 and then even at 918 levels, both those trades went against me. So it's not really looking strong at this point in time, although I do feel that the psychological level of 900 might just act as a short-term support from where a tradable bounce might just occur. But that trade is also very fraught with risk. Although the commodity looks like it's oversold on the short-term charts, I would want to see whether it overcomes a 914 to 916 band before taking a fresh view. At this point in time, I think being oversold on the very short-term charts, there is a pullback rally coming in, but that would basically terminate without any warning if further declines were to commence from here. So I would basically stay off.
Well, it's turning out to be a really bearish week, especially for nickel there. Nearly 8.5% of a decline coming in. Shrikant, let's talk about the crude prices and let's get the weekly prices of that also on your screens there. Very sharp declines from nearly 96 plus kind of levels to just about $93 per barrel. Do you think there's further slide coming in for this one?
I would look at $92 as the mark, and though of course on the MCX I would probably say that if it breaks 5,100, I don't know if it's already broken that as yet, then of course even hanging on to any of the long positions would be out of the question. In fact, you could start looking at it bearishly. On the other hand, if it does break the 92 levels, then of course then we are back again to the same 82 levels or whatever it might be. On the charts, of course, there is an indication that it may break these levels. At this point of time, I wouldn't really buy into it, and I also wouldn't sell into it, because if I have a long position, I'd probably hang on to it till 5-1 and then exit in case it breaks. I'd keep my stop loss there and then relook at it. But at this juncture, since it sold off quite sharply also in the last day or so, I don't think there's anything. Also, if you look at it, it didn't really break the 5,250 levels on the upside, comprehensively. That indicated that it didn't really have the strength to move ahead. So at this stage, I think that if it doesn't hold 92, then you may see crude coming down further.
Vijay, what's your sense coming in for natural gas now? Because there has been sharp decline in the whole throughout sector there.
You're right, Manisha. And I would again come back to my view I put forth a couple of days ago that I would want to trade the March futures of natural gas at sub 180 levels, which is basically not happening so far. Because the February futures are so close to expiry, and the cost of carry typically in natural gas tends to erode a trader's notional gain. So if I get March futures at 177, 178 levels, I might prefer to take a look at it, provided the price, open interest and traded volume correlation supports such a move. At this point in time, there's nothing to suggest on the charts that natural gas is raring to go upwards, and unless that happens, I would basically sit on the fence even on natural gas here.